I don't know whether we start on the shutdown, on the US-China trade relationship, or even on what's happening in Europe. What worries you the most out of those three?
So actually nothing particularly, but I think the risk for the market is we don't get, let's say, any satisfactory resolution for any of these risks present in markets right now. So then investors globally are just going to be looking around and asking, where's the good news? There's no bad news that wants me to run for the hills. I don't see any good news. So
what about the Fed not tightening? Is that good news?
Well, that's sort of in the price already. So that's the least that clients would expect from the Fed, when the global economy and geopolitics is actually running out of good news. So then I just, like, the big fear, well, it's not exactly a fear, but the risk is that everyone just goes into risk management mode for the whole of the year, and then, no investment, no impulse. But
the fact that we averted a government shutdown in the US, and then it becomes onto, if you declare a national emergency, then it's kind of more politicking than actually hurting the economy. That's good news. Yeah,
that's where, if you look at the first shutdown, it was not until the end, whereby people really started to worry about the economic news. And so, that was just cut off. And now the prospect of government staying open, I think it just pushes the economic side, just kicks it out to long grass for a while. I think investors, though, will ask, when does the political stability actually does come back to the fore, and is that going to impact my views on investing in the US over the medium to longer term? That is an issue.
And Geoff, we're also just getting some pictures of the Prime Minister of Spain, Pedro Sanchez, briefing reporters. We may get, of course, some fresh elections pretty soon. Does it mean that you just buy yen or Swissy as a haven?
Well, so if you ask the Japanese investors and look at them right now, so do they want to see a massive flow into yen and Swissy, because they're actually bleeding money on hedging costs versus the US with interest rate yields where they are right now. So we're just telling clients, stay diversified, do manage your risk. And the hope is, I guess, even without the good news impulse, so to say, global economy just on its own is actually still ticking along.
Do you worry about the used economy? I don't know how to make... retail sales overall for the month of December were actually weaker worldwide. I don't know whether that's symptomatic of a possible recession to come or significant slowdown, or whether it's just a blip.
Well, slowdown is certainly for sure. Actually, if you look at our growth forecasts for next year, they are even weaker than for this year, right? So for the next 2 years, it is going to be quite challenging. But we do push back against the notion that there's going to be a recession. Sure, the risk is rising, but there's nothing in the underlying hard data and soft data to suggest inflation, a recession is coming through either.
Jeffrey, overall, what do you do with treasuries? Do you like treasuries?
On yields, actually, we think the 10-year actually could drift back up to 3.10, that kind of level. But the curve is just going to be as fat as a pancake, for a while to come. And I think that's something that investors, just as an insurance policy, no tightening of financial conditions, they'll be happy with.